So Matthew's here with Business then. We hope to be going live to Davos in just a few moments' time. But before that, in just over an hour, the British Prime Minister making that key speech on Britain and the EU. Matthew's been looking at the economic stakes, hasn't he?
Yes, because as this debate now really gets going after that speech, we're going to hear a lot more from the business community because there really is a lot at stake here. For example, around 3 million jobs are believed to depend on Britain's membership of the EU, but others argue that perhaps freedom from some of the red tape that comes out of Brussels could help business growth. Well, let's hear the arguments from this report by Caterina Vitozzi.
I think there should be a referendum on whether we should stay in the EU or leave it, and I don't think it should be out of our control.
I think the UK and the EU will stay together. The European marketplace is far too big for us to not support it.
Varied opinions on the streets of London, as in the corridors of power. But what would happen if Britain did leave the EU? Britain freely exports 53% of its goods to EU countries. That creates around 3 million jobs. If Britain left, it could arrange barrier-free trade agreements like Norway has, but it wouldn't have any control over the rules around either exports or its average 200 billion euros worth of annual imports. Yet hardliners argue the break could free up the UK to make other international deals and boost the 90% of British small and medium-sized businesses that have zero trade with the EU.
Businesses generally want predictability in terms of trade and taxation, and the last thing they want to do is not knowing whether they'll suddenly face trade barriers selling things to France or Germany.
Two of the world's biggest car makers, Ford and BMW, who have UK plants, have labelled an EU exit devastating. Some researchers say foreign direct investment would drop and the economy shrink by more than 2%. But Eurosceptics say a Britain out of the Eurozone and its crisis could be more attractive to foreign investors. City of London bankers generally agree that the UK acting alone could make it harder to access European and other foreign markets. If bankers quit the city because it left the EU, the UK would also lose the tax revenues of some of its highest earners.
So then, those business and financial bigwigs, still like that word bigwigs, they're gathering in the Swiss resort of Davos this week, aren't they, Matthew?
Yes, they are. Thousands of them gathering, crowding into this very beautiful, snowy resort there. And, of course, they will be accompanied by many, many journalists as well who will be monitoring what's being discussed down there. Now, France 24, of course, is not being left out of that. We have sent our own team down. That includes our business editor, Marcus Carlson. He's been down there taking the temperature of what's going on, and he sent us this report of what's on the minds of business leaders.
For a small town in the Swiss Alps, Davos has a big footprint. It's become an annual ritual for inhabitants here to see the world's rich and powerful fly in for the World Economic Forum. They come to grapple with the challenges that lie ahead for the global economy.
Like every year, there's also criticism against this event. The suspicion is that this is a rich man's club where powerful people go to determine the future of the world without democratic scrutiny.
The World Economic Forum counters the criticism, saying that unions, academics and religious leaders are also on the guest list.
Obviously, I hope they have a chance to actually consider partnering and working together on some issue. And it could be a business issue, it could be a political issue, societal issue.
This business leader also says there's been a change of attitude in Davos in recent years.
If we look at last year's meeting in Davos, the big theme was the need for a new economic model and that capitalism must change. This is starting to happen. Of course, there are still things every year that aren't perfect, but I think we're moving in the right direction.
A group of around 50 young people have been hand-picked to rub shoulders with big business and decision makers. They're members of an initiative called the Global Shapers, and they want to see solutions come out of the talks.
I want to see leaders addressing the extremely worrying situation of youth unemployment because it's a bit frightening.
A talking shop for the rich, or a place where leaders can get creative to resolve issues like youth unemployment and low growth rates. Opinions are divided on the Davos event, and it's up to participants to prove its value.
Still hoping to be live in Davos in just a few seconds' time. In the meantime, though, how are the markets looking?
Well, let's take a look, first of all, at how Wall Street performed on Tuesday. Markets there did pretty well. Now, that's over optimism that over a vote that will take place later on Wednesday to extend the country's debt limit. But in Asia, it's been a different story in this Wednesday trading session. Look, all red there. The Nikkei, in particular, down 1.5%. Disappointment that action by the central bank to boost the economy, perhaps not as big as had been thought, and also the yen's been strengthening, and the markets there always hate that because that hurts those Japanese exporters. Well, let's get some of the day's company news now, and revenues at Google rose by more than a third, taking full-year sales to $50 billion for the first time. But the Motorola mobile business, acquired by the company last year, is still dragging on those results, and Google says it will take some time to make that business profitable.
Tech giant IBM has also pleased investors. Its profits up 10% in the final quarter. IBM has refocused its business on software. The chief executive, Ginny Rometty, said the results showing the strategy there is paying off.
And staying with technology, Microsoft has joined negotiations to buy a stake in the struggling computer maker Dell. That's according to the Wall Street Journal. Dell's share price has been falling steadily over the last few years, and it's believed to be looking into options to take the company private in a deal estimated at $25 billion.
And staying with the EU now, we've got a new split over tax.
That's right. Now, 11 countries, this has been under discussion for quite a while, this financial transactions tax. 11 countries have agreed that they want to move forward with it, and so they are going to. The idea is that this tax, the levy raised from it, will help pay for the rescue of Europe's banks and discourage risky trading. And you can see the countries there, France and Germany among them. It'll apply to a range of different things, including shares, also bonds and derivatives as well. Well, the commissioner responsible welcomed the move.
Today is also a milestone in global tax history. For the first time ever, the financial transaction tax will be applied at regional level. A bloc representing around 2/3 of EU GDP will implement this fair tax together, answering the long-time calls of their citizens. And in doing so, they can pave the way for others to do the same.
So Matthew, have you got any idea how high this tax is likely to be?
Well, there have been proposals from the European Commission. This, of course, all now needs to be worked out, the detail of it. But the European Commission said 0.1% on shares and bonds and 0.01% on derivatives. So we'll see what happens with all of that.
OK, we can go now live to Davos. Let's join our business editor there, Marcus Carlson.
Hello there. Yes, indeed. It's a fairly cold morning here in Davos, of course, and this as global leaders get together here in this small Swiss town. I suppose you could say that the mood here is hesitant. A survey from PricewaterhouseCoopers which came out on Tuesday, showed that around about half or so of global CEOs think that the world economy will chug along. They don't think that it's going to get massively better, and then they don't think it's going to get significantly worse either. Chug along, I suppose, is the key phrase here. I'm joined here in our Davos studio by the Indian CEO, C.P. Gurnani. He is the chief executive of Mahindra Satyam. Thanks very much indeed for being with us today, sir. What do you make of the mood here in Davos this year as we're now getting underway?
Yesterday, I had about 300 CEOs for our day before Davos dinner, and I can only say that different people from different parts of the world had a different take on what the economy is. US looks very optimistic. Europe still is hesitant, as you rightly said. Middle East and Africa is optimistic. India and China, both, in my opinion, are more confident about their economy on an individual level. Emerging markets, again, is looking better.
If we look closer at your part of the world, then the Indian economy, there's been some concerns that the Indian economy is slowing down. Are you seeing signs of that?
Yes, it has slowed down a bit.
You can't keep going until 59.
Despite of that, I think next year forecast is 6.5%. And at 6.5% growth in this current global economic scenario, I think India is doing very well.
All right, thank you very much indeed. Sipu Gurnani, the Chief Executive of Mahindra Satyam. We're going to have to wrap it up there here from Davos. We will be back, of course, in the coming days with more updates as global leaders get together. Back to you in the studio.
Marcus, thanks very much. A lot more from Marcus over the next few days here on France 5 Cap. Thanks to Matthew as well with the business. The latest news with Lorna. She'll be here after the break.